Hello everyone and welcome back to Nishma's Edu Launch. You know that we are running Accounting Basic series and today we have reached almost the end part of the series. In today's session we will be discussing about trial balance. Now what is a trial balance? A trial balance is a statement that is prepared with the balances of ledger accounts. In ledger accounts we have heard about balance brought down and balance carried down. Now with that balances, we are going to prepare a statement that is known as trial balance, which forms the basic step in the preparation of financial statement. So let us discuss the format and the problem regarding trial balance. So let's quickly move on to session. So here on the board you can see that I have written the format. So for a trial balance you should give the heading first. Trial balance as on. The date on which you are preparing a trial balance should be given on top. Then after that I have provided here 4 columns. First one is serial number column to note the number of items appearing in trial balance. After that you have a particulars column where you write the category of things, that is your assets, liabilities, capital, debtors, creditors, etc. You number it and you will write it in the particulars column. Then you have a debit column and a credit column. Okay, for any item, say let be asset or a liability, you need to fill only either a debit column or credit column and not both the column. Okay, you will understand it later when we discuss more about it. Okay, so if you're writing an asset will have always debit balance, right? So you will write here asset and you will fill the debit column. Then if you are talking about a liability, you will write the name of the particular liability and you will fill the credit column. Okay, I'll give you an example. Let us consider an asset account, your debtors account. Debtors are something which you are they are your receivables. They are going to give you money. They are the persons who owes money to you, right? So I'm going to draw that debtors account here just to show you how you will carry forward the balances of ledger account to trial balance. Okay, so the accounts are T-shaped. Okay, I'm going to draw debtors account. You give the heading debtors account and you're going to write. Okay, so first thing I'm going to do, when does a debtor arise? A debtor arises from credit sale. So what is a credit sale? I mean, what is the journal entry for a credit sale? Debtors are the receivers, or they owe you money. So debtor is an asset. When an asset increase, you have to debit it, right? Debit. Asset increase, debit, and you will go to the debit side of the debtor and you will write the other aspect. Okay, if that is too difficult for you to follow, you just imagine the real account rule, real account and personal account rule. What is happening there? Debtors are the receivers. So what you should do as per the personal account rule, you should debit the receiver. So debtors have been debited. So what will be the entry? Debtors account, debtor to sales. You are selling goods, right? So for when you're purchasing or selling goods, you simply call it purchases and sales. Okay, remember this purchase and sale is said with relation to goods and not any other assets. Alright, I hope that's clear to you. So when you're making a credit sale, what will be the journal entry? Debtors account, debtor to sales, simply sales. Alright, so you have debited the debtors account in that entry. So you go to the debit side. Now this is the debit side and this is the credit side of debtors account. You go to the debit side and you will write to sales. To sales. Say it may be for 1 lakh. Okay, you have made some credit sale to debtors for 1 lakh and they have promised to pay you 1/4 of the money. Okay, 1/4 of the money, that means 25,000. Okay, so when you are receiving cash from debtors, what will be the journal entry? Cash is coming in, right? Cash is coming in and debtors are decreasing, or debtors are the givers, right? In either of the cases you will credit the debtors, right? Alright, so debtors will be credited. So you go to the credit side and you will write by cash account. By cash account. Concentrate on the entry cash account debtor to debtors. Cash is coming in, so you debit it, and debtors, they are the givers, or you can say debtors are decreasing. When an asset is decreasing, what will you do? Which balance you will give? If an asset to increase, if you give debit balance, in order to decrease the value of an asset, you will give the opposite balance, that is credit balance. Okay, all right. So debtors will be credited. All right, that's what I've written here. Okay, cash account debtor to debtors. Okay, so you will write how much amount. Suppose 1/4 of the amount of 1 lakh is being received by you. Then what will happen? You'll write 25,000 here. Okay, so you have to receive 1 lakh, for which you have only received payment of 25,000. Okay, please keep in mind, you are supposed to receive only amount up to 1 lakh and not more than 1 lakh. They are not going to pay you more than 1 lakh. So always remember, for every asset, okay, let it be anything, every asset, the balance, closing balance, sorry, the opening balance will appear on the debit side only. Okay, the debit side will be greater. Always, for every asset, this is going to be the same. Okay, so debit side will be greater for every asset. So you can see it clearly. Now the closing balance will appear on the credit side, right? So you'll write by balance carried down. Balance carried down. How much will be the balance? 75,000, right? 75,000. Okay, and you close the account. You close the account. What is the total? 1 lakh. Alright. Now, if the closing balance is coming here on the credit side, then automatically the next year brought down will come in the debit side, right? So here you have written the closing balance. The next month or the next financial year, you're going to bring it down, right? You will bring it down to debit side. So you can write to balance brought down. Okay, the previous year's closing balance will be your next year's opening balance, right? So see, this is the same in the case of closing stock. Previous year's closing stock will be the opening stock of next year. Simple as that. Okay, here also the last year's closing balance will be the opening balance of next year or this year. Okay, so which is your balance brought down. Okay, balance brought down means it's the opening balance, and balance carried down means it is the closing balance. Now we have to listen carefully, that is, on which side of the ledger account you are writing the opening balance, that is this balance. Okay, balance brought down, that same side you should write. Here you have written on the debit side. Balance brought down is coming on the debit side of debtors account, right? So how will you fill the trial balance? You will put the serial number 1 and you will write debtors in the particulars column. You write the debtors, and in which side this balance brought down is coming. Balance brought down is 75,000, alright? 75,000. So it is appearing on the debit side of the debtors account. So you go to the debit column and you fill 75,000 here and not here. Alright, where this brought down is coming, that side column you should fill. If it is coming on the debit side, you will fill the debit column. If it is appearing on the credit side, you will fill the credit column. This is how you prepare a trial balance from the balances, or after preparing ledger accounts. Alright, I hope this is clear to you. You look at the brought down, where this brought down is coming. Okay, so if a closing balance is appearing on the credit side, automatically you know the brought down will appear on the debit side. And if the closing balance is appearing on the debit side, you know that the opening balance, which is balance brought down, will appear on the credit side. Simple as that. There is nothing to worry about. If you know the posting well, you can prepare the trial balance very easily. Alright, so this is how you will prepare trial balance using ledger accounts. Okay, now let us discuss a problem. Okay, so we can see here I have drawn a question, and I have shown the answer also. Now let us discuss this question. Okay, prepare trial balance from the following informations. Capital 5 lakh, purchases 70,000, sales 1 lakh 40,000, salary 30,000, creditors 30,000, debtors 1 lakh 70,000, cash rupees 60,000, bank 1 lakh, plant and machinery 2 lakh 10,000, drawings 30,000, sales return rupees 500, and purchase returns rupees 1,000. So given these are the balances of ledger accounts. All right, ledger accounts, they are the closing balances of ledger accounts. So in certain questions you will be given like this balances, and you will be asked to prepare trial balances. So what will you do? For this purpose, you must have a thorough knowledge about the rule of debit and credit relating to four categories of account that we have discussed, that is assets, liabilities, expenses, and incomes. So you know that all assets have debit balance, liabilities have credit balance, expenses have a debit balance, and incomes have credit balance. So you must keep that rule in your mind while preparing trial balance. If you know that thoroughly, preparation of trial balance will be a piece of cake for you. So let us now discuss, or let us see how we are going to write these things in the trial balance. Okay, so first item is capital. Okay, you know a capital is the liability for business. So it will have credit balance. Okay, credit balance. This means what? The brought down will appear on which side? On the credit side. Okay, brought down, I'm talking about brought down, that will appear on the credit side of capital account. So you will write it on the credit side. All right, you will write it on the credit side. Then you have purchases. Okay, purchases is a direct expense to the business. Okay, it's an expense. Purchase, you have to purchase goods, that's an expense. Okay, so you have to spend money and purchase goods, and you sometimes you may process it, and you might resell it. Okay, let it be anything. So purchase is an expense. So all expenses have which balance? Debit balance. So I have written here debit balance. Okay, on the debit column I have written 70,000. Then after that we have sales. Now if purchase is a direct expense, then sales will be what? Opposite to that. That's a direct revenue or direct income for every business. So it will have credit balance. So I have written it on the credit side. Okay, credit side. So the balance brought down will appear on which side? Credit side of the sales account. Okay, then next one is salary. Salary is again an expense. It has debit balance. So without thinking anything too much, you can post it on the debit column. Okay, salary, you will write it here, and you will write it on the debit column. Okay, so that is done. Now creditors. Creditors is another liability for you. So it will have credit balance. Okay, credit balance. So you will write creditors on the particulars column, and you will write the amount in the credit column below. Okay, then you have debtors. Debtors are just opposite to creditors. If debtors are if creditors are your liability, then debtors are your receivables. That means your asset. So where will you write the asset? You will write it on the debit column. Okay, the amount is 1,70,000, and you will write it there. Okay, then cash is also an asset. Okay, cash will appear on the debit side. The balance will appear on which side? Opening balance will appear on which side? Debit side. Okay, debit side. So you will write it on the debit column. Then you have bank. Now to say about bank, most probably it will be asset. Okay, if simply bank balance is given, you can assume that it is an asset. Sometimes you will be given credit balance in bank. Like in the question itself, you will be having credit. Okay, you will be given like this credit balance. Okay, so that means what? That means you have taken overdraft. Okay, overdraft. That means it's similar to loan. So you have taken loan from bank, and that is that account or that balance is being reflected in your passbook. Okay, so that we will show it on the credit side. Okay, it will be given in the question if it is credit balance, so you have to just write it in the credit column. Otherwise, you can write it on the debit column. You can consider it as an asset, because that shows the bank balance, shows the cash at bank. You owe it, you own it, right? So that way we will show it on the debit side. Okay, here I'm not giving it as overdraft. I'm considering it as asset itself. So I'm writing it on the debit column. Okay, that the amount was 1 lakh. Okay, I have written it there. Then next one is plant and machinery. Plant and machinery, the value is 2,10,000. That is an asset for your business. So I have written it on the debit column. So the drawdown will appear on the debit column. Okay. Then we have the drawings. Okay. Drawings you can consider it as another category of account. That is drawings, it's similar to your expense. It has a debit balance. It reduces the capital. Okay, it shows a reduction in capital, or the owner has withdrawn some money from capital for his personal use. So drawings always has debit balance. If capital has credit balance, then drawings is just opposite of capital. Okay, so drawings will have debit balance, whereas capital will have credit balance. Okay, so drawings, since it is having debit balance, you can write it on the debit column. Okay, all right. Then we have sales return. Okay, sales return. Sales return means what? You have sold something to your customers and they have returned it back, maybe due to some default or some mistake in processing the order. Okay, let it be something. So you have received back the goods that you have sold earlier. So how you will treat the sales return, or what you call return inwards. Okay, return inwards. Something you have sold is coming back. So you call it return inwards, or you can call it sales return. So you will just treat opposite as that of sales. If sales is an income and it is credited, if sales return will be opposite to that. That means sales return will have debit balance. Okay, just the opposite of sales. So sales return will have debit balance. So I have written the amount of sales return in the debit column. Okay, next we have purchase return. Purchase return is 1,000 rupees. It is just opposite to purchase. Something you have purchased and that thing was not of good quality maybe. So you have returned it to your lenders, or your from the person whom you have purchased from. Okay, so you're returning it, so that you call it purchase return, or return outward. You're giving it outside. Okay, outside your business, so it's known as return outwards. Okay, so it is treated opposite of that of purchase. If purchase have debit balance, the purchases have debit balance, right? It is a direct expense. So what will be purchase returns balance? The opposite of that, that is credit balance. So you will write it in the credit column. Now the most important thing to be note here is that in the trial balance you have debit column and credit column, right? So both these column will tally. Okay, both this column will be equal because we follow double entry system. All right. So what we have learned in double entry system, every debit has a corresponding credit to it. Okay, both debit and credit in the transaction will be equivalent to each other. So in trial balance also that principle applies. The debit column, total of the debit column will be equal to total of credit column. If that does not happen, you have made some errors in preparing trial balance. It may be while you doing posting, or it can be done at the time of writing or preparing trial balance. So you will have to check it out. Okay, the errors in trial balance, etc. we will discuss in the errors chapters later on sessions. We will be seeing that. For now, you must realize that the trial balance, the total of trial balance, always it will tally. Okay, so you can see here total of debit column, if you take 70,000 plus 30,000 plus 1,70,000 plus 60,500 plus 1 lakh plus 2,10,000 plus 30,000 plus 500, you will get 6,71,000. All right. Then the same, if you add up the credit column, that is 5 lakh plus 1,40,000 plus 30,000 plus 1,000, you will get 6,71,000 itself. Okay. So this is how you will prepare a trial balance. If you have any doubts, you can comment it below. I will be clearing that in my next session. So hope this video was helpful to all of you. Thanks for watching.